Hello everyone, I'm Conray. Welcome back to the channel. So in today's episode, I'll be talking about a few different portions. First of it is on Copart as well as the idea of a moat and excessive returns. And then in the second part, I'll be discussing another stock that I've looked into over the past week or so. And it's in the aerospace industry as well. If you watched the video from last week, you probably have an idea of what this company is. Okay, so first of all, let's talk about Copart. So Copart is currently down around 40% in the past year alone. The stock is currently trading at a 20 times earnings, if I'm not wrong, $33 a share. So for Copart, I've had a lot of questions in the comment section asking me to discuss the stock. So I'll just discuss it very briefly here. So we'll talk about firstly, why the stock is falling off. Secondly, what I think about the stock currently. So on the stock falling, it's simple. The main reason why the stock is down is because growth is stagnating. So I think they printed in the last quarter that they had flat growth, and moving forward, the markets are basically expecting Copart to continue this trend over time. So then the next question is, why is growth stagnating? So management has said that growth is stagnating because there's a large pool of people that are currently uninsured. So why are they uninsured? It's because of the fact that your auto insurance in the US have gone up substantially over time. So if you look at the past 3 years or so, I think auto insurance is one of the items that has gone up the most in terms of pricing. And what this means is that when your prices go up for insurance, less people will get insurance. And when less people get insurance, that just leads to Copart not being able to salvage as many cars as they previously wanted to. So that's one segment. And the second reason why the revenue is sort of slowing down in terms of growth is because in 2024, there was actually a catastrophic event that led to many cars being salvaged. And what that meant was you had this one-time artificial impact where your revenue grew a lot faster than expected. And in 2025, because there wasn't any form of catastrophe, what that meant was that your revenue appeared a lot lower than what was being expected. So that's one portion, which is why the growth is currently slowing. Okay, so let's talk about the idea of moat versus generating alpha in the market. So I know a lot of YouTubers online, what they'll say is that, oh, this company has an incredibly high moat. It has high quality earnings. Revenue is amazing. This company is growing at 30% over time. But I think it blurs the lines between a high moat company and a good investment. A good investment is a combination of a lot of things. A high moat company can contribute to you having a good investment, but it shouldn't be viewed alone. You should incorporate valuation, you should find your thesis, you should develop an understanding of a company as well. So extrapolating this to Copart, so it operates in a duopoly in the salvage car market, and it has high barriers to entry as well because you have like network effects, you have scale, you have land. This company is incredibly durable and has survived through different economic recessions. But I think you shouldn't blur the lines between a high moat company and a good investment, because if you can't find a reason for Copart to inflect its earnings over time, you can't find a reason for the company to basically inflect the number of insured drivers over time, then there really isn't a reason for you to invest in the company. So whether or not Copart is a good investment, whether or not you can find this thesis for yourself, that's for you to decide. Next part, let me share briefly about software company. So I actually had this chance to speak to some analysts from Goldman Sachs and some consultants, and this was what they said with regards to AI. So they've said that AI is actually increasing productivity over time. It is making things a lot faster. It is making the barriers to entry a lot higher for graduates trying to find a job and trying to find a role in a bank, for example. But AI is not exclusively used today because for AI, it is prone to hallucination. So I actually wrote this in the Telegram channel. AI is still probabilistic. A lot of the output, your generative AI, your Gemini, OpenAI, your Claude, all of it is based on probabilistic assumptions, meaning to say it is still prone to hallucinations. And the problem with that is you will face a lot of trust and compliance issues. So in companies like, for example, Goldman Sachs, they're not currently exclusively using AI because of this, because AI is prone to hallucination. AI might have some mistake, maybe 1 in 100. It is still possible. And if the AI is at fault, then there really isn't anyone for you to blame. On the other hand, if a human is at fault, then of course you can blame the human. With regards to your software company still selling off, I think Microsoft is still selling off. Constellation Software is another company as well. Adobe is at, I think, 12 times of earnings. I think in there you can find a few companies that will probably survive this entire crisis. I'm not actively looking into buying any of them currently. I own a fair bit of Microsoft, but you can look at what Pabrai is doing with Constellation Software. I think Pabrai, he spoke recently about the company and how he views the company today. So I'll try and summarize it. Bear in mind, I'm not touching the position. I'm just sharing my thoughts over here. So Constellation Software is a vertical market software company. And this was what he said. He said that he thinks that Constellation Software will benefit from this, because when your software company sell off, it leads to a lower multiple for acquisition. That's one part. Second of all is that if AI becomes more efficient, then productivity in a company increases over time, which allows your software companies to basically cut headcount. So what he's saying over here is that you have this company, Constellation Software, that is growing free cash flow at around 20% every single year, and it is currently at half its price compared to what it was maybe a year ago, at around 5,500 Canadian dollars. So he's bullish on the company. So that's just one example of finding some gems within the software industry. I think it will take some time for software to be completely displaced, and it's proven by people working in the industry that it's a lot harder to bypass this entire trust and compliance issue. And the second order thought is whether or not the benefits and detriments will actually weigh out and balance out itself. So that's the golden question that you need to ask yourself. That is for you to go and decide. Will AI hurt this company so much to the point whereby the AI loss is actually more than the benefits that they gain from AI by selling their AI products? So for example, in the case of Intuit, will the AI products that they provide allow them to gain more subscribers than what they're losing today to vibe coders that are using Excel, for example? So that's the golden question that you need to decide on. And yeah, just some of my thoughts for the AI industry. And I'll move on to the next part, which is on a company that I've been researching over the past week or so. This company is Airbus. So let's talk about Airbus positioning in the entire aerospace industry first. So Airbus is currently the top of the funnel. So it's the one that is providing the aircrafts. So I'm sure you know your A320, A350, for example, from Airbus as well as from Boeing. Boeing has the Boeing 737, the Boeing 787, all those models. So those are actually provided by your OEMs, which is Airbus as well as Boeing. So currently in the aerospace industry, Airbus has two different people that they deal with. First of all, it's the buyers. Second of all, it's the component providers. So in the case of your aircraft buyers, they're primarily from your air leases as well as your large airlines, like for example, SIA as well as Emirates. So air leases, what they do is that they buy the planes and then they sign long-term lease contracts with smaller airlines that rent it and use it and run their own airlines. So in the case of your aircraft buyers, Airbus currently has a weaker positioning, weaker bargaining power as compared to your air leases as well as your large airlines. Because your air leases and large airlines, what they typically do is they place bulk orders at a certain time. And when you place bulk orders, it means the order value is very high. And what they will demand from Airbus is they'll demand incredibly high incentives and discounts on the initial listing price. So if you go and find a listing price online, more often than not, the actual sell price is around 40 to 50% below that list price that is being provided. The second group of people that Airbus deals with is your component providers. So for your component providers, they are your OEs. So it includes Honeywell, Safran, GE, RTX, Rolls-Royce as well. And in terms of bargaining power, Airbus is substantially stronger as compared to your other OEs in here. Why? Because for your OEs in here, what they'll want to do is they'll give Airbus incentives in order for them to be incorporated in the plane itself. They'll give Airbus cheap prices. They'll normally sell the parts at a loss so that they can go on the plane and collect strong aftermarket revenue for the next 30 years as the plane is being used. Next part, let's talk about Airbus business segments. So in terms of Airbus business segments, they currently have around 3 different business segments. First of all is Airbus Commercial. So Airbus Commercial refers to the commercial planes that they sell as well as the services that they provide. So in terms of the aircraft that they sell, there are many different plane types. So first of all, you have your narrow body aircraft. Second of all is your mid and your wide body aircraft. And last of all, it's your regional jets. The wide body segment is currently one that is dominated by Boeing today. So currently the company has record backlogs. There's more than $8,000. So what that means is that people ordering today are actually getting the planes 10 years later. So this actually provides great revenue visibility for the company. And in the case of the unit economics, there's simply just pricing, how much price increase that they can put on all these different aircrafts that they sell. And second of all is how many deliveries they can have every single year. So the problem now is that they have a bottleneck because of your engines. So since around 2024, Pratt & Whitney has had engine issues, and because of that, this has delayed Airbus delivery over the past few years as well. And currently Airbus is trying to pursue some form of legal action against Pratt & Whitney to try and pressure them. Pratt & Whitney is from RTX. So that's one segment that is actually hurting the company. In terms of whether or not they can increase this production over time, management has been laser focused on it. They've increased production over time, but not at rates that the markets are expecting. Second of all is the DNS as well as the helicopter segment. DNS refers to your defense and space. Helicopter is just them selling helicopter. So it grows in line with your military spending and your military budget. And in the case of your DNS and your helicopter, they have substantial portions of revenue coming in from services. So I believe it's around 40% for each of these segments, as compared to your Airbus commercial, which is only around 11%. So your services are high margin revenue that is coming into the business every single year. So that is what is providing predictability in terms of earnings in these two business segments. Your defense and space business has been historically unprofitable. I'll be talking about this later on as well in the thesis segment. Next part, let's talk about Airbus's moat. So Airbus has mainly a few different modes over here. You have high switching cost, regulation, as well as scale. So in terms of high switching costs as well as regulation, it is simple. Your pilots are typically trained on only one model. So if they need to switch to another model, they need to undergo retraining. So it's around $66,000 for 8-week course. So imagine if an entire airline has 1,000 pilots and they want to switch over. Yeah, that's the amount of money that they need to pay. Second of all is that regulations mandate that you go through this entire 8-year process before you can license your plane and commercialize it. So in the case of Airbus, because there is very high regulation, you have your FAA licenses that they need to apply for as well as your EASA. What that means is that it prevents new entrants from coming into the space. So that's one part. Second part is simply the scale of the company. So you have extremely high R&D costs and capex that needs to be put into place before you develop a new generation of an aircraft, for example. So it's around $10 to $15 billion for them to develop it, and no company is able to do so. Second of all, so because Airbus has scale, it is basically able to benefit from economies of scale over time, meaning to say each plane model that they produce is costing a lot lesser, allowing them to maintain profitability in this segment. Second of all is that scale allows for the development of fuel efficient technology. So in the case of Airbus today, the narrow body segment is the one that they're dominant in. And the reason why they're dominant in it is because of reliability as well as trust. And another important factor is actually fuel efficiency. So when an airline or an air leaser wants to buy a plane, there's normally a few different considerations. So you have cost, reliability, and cost actually ties with fuel efficiency. Fuel efficiency refers to how much fuel an aircraft is burning per hour per flight. And typically for your airlines, around 30 to 40% of the cost is tied to fuel. So what they want to do is, of course, to reduce the cost on the fuels. And for Airbus in the narrow body segment, they currently edge both Embraer as well as Boeing. So that's why the company is dominant in that segment. Before going on to the thesis, let me talk about the competition in the space first. So you have two primary competitors to Airbus today. First of all is Boeing. Boeing is the US version of Airbus. So they're currently dominant in the wide body segment. But for Boeing, the problem with the company is reliability issues. So in 2019 as well as in 2021, they had massive grounding of planes because of safety issues, and that has led to many of the airlines switching over to Airbus instead. So in the case of Airbus versus Boeing, my understanding of it is that each company dominates an individual segment. So Boeing is with wide bodies, Airbus is with narrow bodies. In the case of wide body versus narrow body is projected to grow a lot faster over the next 20 years compared to wide body. So it's of course accretive to Airbus, more accretive to Airbus as compared to Boeing. Second company that is in competition with Airbus as well is this company called Comac. So Comac is a company that is in China. So this company was founded in, I believe, 2008, and it was founded to break the Airbus and Boeing duopoly. So for context, Airbus was founded in 1970. So this is actually a state-mandated company with unlimited funding if the Chinese government wants to break the duopoly, and it will likely be a powerhouse in China. So Airbus currently has around 20% of their backlog that's coming in from China. So assuming all of that is switched over to Comac, that will likely lead to market share loss in the 2030s, which is a key risk for the company as well. But globally, I don't think there'll be any issue with regards to Comac as a competition. Comac will likely only be able to gain traction in China. And in terms of fuel efficiency as well as cost, it is still lagging behind Airbus. So for example, Airbus recently just received an offer from China Eastern. It is a Chinese airlines that is state-owned as well. So they're still ordering their Airbus planes. Next part, let's talk about the thesis for the company. So in terms of thesis, the first thesis that I have is the pricing ability for the company over the next few years that will likely benefit from 2030 onwards. So they currently have record backlogs. And what that means is that the company has control over the delivery slots. So if let's say you want to order and get the plane in, let's say 3 years time, you have to pay a lot more than someone that is ordering 10 years out. And this pricing ability is in combination with other factors as well. So you currently have an aging fleet, which means that your airlines are actively trying to replace their fleets. Second of all is that your leasing as well as your secondary market, they're growing a lot faster as compared to the ASPs, your average selling price. Airbus is currently selling the plane at today. So that difference between the secondary market as well as the primary market is basically the latent pricing power that the company has, if it is able to capture some of the pricing. So it will likely hit the numbers in 2030, not so soon. What you can do is you can track the backlog numbers and then compare them to the deliveries. And so far, based on my understanding of the company, they remove incentives in around 2022. So they currently have around half of the 2022 backlog delivered. So it will likely take around 3 more years before the numbers hit with the increased pricing. Margins are currently at around 10%, so pricing power will improve the net income by a very large margin because incremental pricing is basically free profits for the company. So assuming 5% pricing growth and assuming 50% incremental margins, that is 2.5% EBIT margin growth and then 25% segment EBIT growth. So if you have to view it from an entire market perspective, this means around 20% group EBIT growth for the firm. So the markets are currently pricing in around 10% growth over the next few years in terms of revenue. This entire revenue segment that the markets are basically expecting is almost 100% derived from deliveries. So the markets are clearly underpricing the fact that they are pricing. And once the pricing comes into effect, you will see this company growing substantially in terms of the EBIT. Second thesis for the company is the DNS turnaround. So the DNS, which is the defense and the space business, has been unprofitable over the past few years because before 2022, what the company did was they signed something called fixed cost contracts. Fixed cost contracts means that your cost of the contract value isn't increasing with inflation. So we all know what happened in 2022. You had massive inflation over time. Because of that, Airbus actually suffered losses over the past few years. So they had massive losses because they were fixed costs. And what they're currently doing today is they're switching over to inflation-adjusted pricing contracts. So if inflation goes up, then it basically tracks inflation. So this is accretive for the company, and they've just turned the corner in terms of margins. So margins are currently at around 6%. They haven't completely cleared the loss-making contracts yet, but they're actively looking to do so, and it should be cleared in around a year or two. Peer group, meaning the other companies in the same space as well, it's around 10% margins. So this provides meaningful upside in terms of margin growth for the DNS segment, which contributes meaningfully to the entire business EBIT growth as well. So these are my two theses for Airbus. I view the company as sort of like a toll gate. So whether or not they deliver the planes now, or if they deliver the planes a year later, the company will still be able to deliver the planes and capture revenue. Feel free to check out the Substack if you're interested. We write up on companies on there. I think there's a new company that we're about to release soon. It's on, I think, Honeywell. I hope you guys have found this video useful. Feel free to leave your stock ideas in the comment section below. And yeah, I'll see you soon.